Hey guys, today we're going to be talking about the second pillar of your pre-approval, which is assets. Hello everybody and welcome back to my channel. Thanks for sticking around. We are here for our second installment of the 3 pillars to your pre-approval. Today you might have noticed I am inside because it is inclement weather out there. It's been raining all day and it's supposed to rain for several days. So I thought I would go ahead and do some shooting inside. But you should be able to hear me okay, so that's good over the pounding rain. So today we're talking about assets. Now, in terms of lending, assets have their own definition. You'd think it's self-explanatory, but when you deal with people who have economics backgrounds or accounting backgrounds, assets and liabilities, all these things kind of have different connotations to them. Connotative meaning. So in lending, your assets are what are you going to be using to actually purchase your home? What is your down payment coming from? And that could be something like just money you have sitting in your savings account. That's something that could be coming from your 401k. You're doing a hardship withdrawal or withdrawal to buy a house, and that's where those monies are coming from. You might be getting a gift. Maybe a family member is gifting you funds to go towards your down payment. Whichever the case may be, your assets are what is going into the purchase. So it's not about things that you own that have value. It's not about jewelry. It's not about stock options. Well, in some cases that doesn't really matter, but if you're an investor, it's a little different. But when you're going to buy a house, those are the different kind of things that we think about when we come to assets. So those are what assets are. Now, what are some good things to know if you're going to be purchasing a home? One, don't move your money around a whole lot. Every time money moves from one place to another, you're going to have to document it. And sometimes that's a lot easier said than done. It really just depends on your situation, your scenario. But if you have a savings account where all your money is going for savings and you're just saving and saving and saving, and that's what you're going to use to buy a house, leave it there until you're in escrow and you get good guidance from your loan officer as to what to do with that money and when. Don't move money around a whole bunch. You can, but then you're going to have to document it all. And that's going to be a pain in the butt. And no one wants to have a pain in the butt when they're trying to buy a house. They want everything to be nice and smooth. So that's what you want to do. That's what to do with your assets. Keep them in one place if you can. Hold on to your documentation if you've got money coming from different places. If you have money that's going to be a gift, wait till your loan officer tells you what that person should do with that money. If they can wire it directly into escrow, oof, even better. It's a much cleaner type thing than having document it leaving their account, document it entering your account, document it leaving your account to go into escrow. It can become a mess very quickly with people transferring money around, okay? So that's what not to do with that. Another thing of what not to do is don't deposit cash. You might be one of these people that you got $10,000, $20,000 sitting in a safe at home. We call that mattress money. That's just money that you have saved that you want to use that to buy a house. Well, here's the problem. You're going to take that money, you're going to put it in your bank account. And your bank account is going to show a $20,000, $10,000 deposit. And they're going to say, you need to source and document where that money came from. Now, just having a deposit slip ain't going to cut it. It's going to just say cash. And they can say, where'd the cash come from? Like, oh, I've been saving it over the last 6 months, 2 years, whatever. And then I just put it in my account. You can't use that money. That's considered unsourced funds. And there are lots of rules when it comes to buying a house. One of those is they're mostly looking for a lot of the regulations, what make things difficult when it comes to your assets. They're looking for money laundering. Okay, that's the main thing. They don't want people laundering bad money into the system by using it to purchase homes. So when they see a cash deposit, they're going to question that, and you may not be able to use those funds. So we don't want to do cash deposits. If you have a lot of cash at home and you're getting payments regularly from your job or wherever, use the cash you have on hand so that the money that you have coming in, that source that's coming from your pay, that money can build up and that can be your money used to buy a house with. So don't just deposit money. Okay, that's something not to do. So something to do, keep money in one spot and wait till your loan officer tells you what to do with it and when. Don't think you're going to just help out by starting to move stuff around because you're going to make things harder for yourself. Okay, what to do or what not to do, don't deposit cash. Don't start transferring money in from places that you can't maybe source or you can't really document. It's going to shoot yourself in the foot. We don't want to do that. So that's where it comes to assets. Now also, You can do things like borrow money from your 401k with most 401k plans. You're able to do a hardship withdrawal. You might be able to get in a portion there. And when that happens, you'll usually do something like a hardship withdrawal. You'll have to have your terms of withdrawal with you. You got to download that. Usually just get them from the website. You include that with your documentation. You usually have a quarterly statement, that kind of thing. But with regular bank statements, it's going to be your last 2 months. So your last 2 months bank statements are the documentation you typically need. If you're going to get a gift, usually you'll have to have a gift letter executed by the family member, and depending on what loan program you're doing, you may need to have one of their bank statements. Really depends on the loan program. But those are just a couple things to be aware of when it comes to assets. What to do, what not to do, just to make your life easier. Now, some clients that I've worked with, they've got 10 different bank accounts. I don't know why. It's not like they have revenue streams coming in from all these different things. They just happen to have 10 different bank accounts for whatever reason. And they like to move money from one bank account to another to pay for X or pay for Y. And it's just, it's a cluster of things trying to track down and figure out, because now you need all those statements. You need 2 statements for every account for any money that's going to go into the transaction. So if you have that kind of setup where you have lots of bank statements, keep all your savings into one spot. Don't move your money around. Pay from one account if you need to, but you don't need 10 bank accounts. You really don't. I don't know why that is. Just something to be aware of. Now, when you are buying a home, also to be aware of, and I'm going to cover this more in my next video, where we're going to talk about credit, is if you have debts that don't report on your credit report, but you're paying for one way or another, you're paying out from your account that you're also showing that you have assets from. If you have a reoccurring payment coming out and it's in something for a company that's not listed on your credit report, that's going to draw attention from an underwriter. An underwriter is going to see that and say, hey, they obviously have some kind of liability over here we don't know about. We have to get more information. So just be aware. I've had clients that were paying their student loans and didn't realize that their student loans weren't reporting on their credit report. And now all of a sudden we have to include those payments, and now they are really close to not qualifying, or they don't qualify anymore, and they can't buy the house they're in escrow to buy. So there's some little things that can trick you up when it comes to your assets. Just mostly, where's the money coming from? Where has it been for the last 2 months? We don't want cash deposits. Real quick, if you find any value in these videos and what I'm talking about when it comes to lending, and you're going to be buying a house and kind of some questions that you have, take a quick moment, pause the video, like at the bottom, subscribe to my channel. I'm going to be releasing more and more content. Comment if you have any questions or anything that comes up, or just things that you've dealt with and you want to start a dialogue. I would love to cover whatever it is you've got on your mind. We can cover in another video. We can talk about. This is just the day-to-day stuff that I see as a mortgage processor. Things that people do and things that can make your life harder or can make things a little bit smoother. Now, when it comes to lending and everything involved and how much money is at stake and people's time, you want things to be as smooth as possible. So you want to make sure you consult with your loan officer when it comes to anything to do with your assets. Now, you can still get pre-approved thinking about how much money you need to save. You're not completely pre-approved per se, but you could buy X amount of house if you save $20,000. Now you know what your savings goal is. Now, if you are going to sell a vehicle, sell a trailer, sell something that's of monetary value that you want to use for it, just document your bill of sale and what it was that you sold, so that you can document that's what that is. So just be aware of that sort of thing. Sometimes this stuff kind of bites you because you don't realize that you're looking back at least 2 months. So you can be like, oh, I did that back in June. Here it is, we're in August. Well, I didn't think that would matter. Well, it does, because we're looking at your last 2 statements. So think about the last 3 months of what you've been doing with your money if you're going to be coming up to that time where you are ready to buy a home. And if you have any questions, ask your loan officer. Ask before you do anything. Okay? So that pretty much concludes our assets. There are other things. There's lots of other rules when it comes to assets, but this is kind of the general thing. It should work for most people. If it's something very specific, of course, comment below. Let me know what you're talking about, what we're thinking about. We could talk about it. My next video is going to be on credit. It's a good one. A lot of people don't understand credit and what it means when it comes to going to purchase something. And I'm going to cover a lot of those points in my next video. But yes, if you made it this far, thank you for watching everything. Thanks for sticking with me. If you haven't already, like and subscribe. Comment below. Let's talk about things. And and we're all good. Thanks for stopping by. We'll talk to you later. Bye.